Welcome to the Deals Private Capital Symposium. I'm Mary Kathleen Flynn, and I'm talking with Diane Vazza from Standard & Poor's. Diane, let's just talk about, in broad terms, what are some of the opportunities for deal making given the current economic climate?
Sure. One of the ways we think about opportunities is we think about the stress in corporate America. And so we don't think about just classically distressed, but we think about those companies that might be also on the verge of potentially default. So right at this point in time, we have, which is second quarter, we have about 236 companies in the U.S. that we consider stressed. And we have 3 different screens that we look for those types of stressed companies. We look at our ratings and our ratings outlook. So we look at those companies, for example, we consider weakest links, those companies that are rated by us B- or lower and have a negative outlook. So from B- you go right into triple C and potentially into D. We also look at those companies that the market is pricing as distressed. We use a conventional definition, so we use those bonds that are trading 1,000 basis points over treasuries or 80 cents or lower on the dollar if we're looking at bank loans. And we look at the whole rating spectrum. We look at where any company is that has a negative outlook. So it might not be in speculative grade, it might be in investment grade. Then what we do is we look at the top industry sectors, and for the past 18 months, clearly what we've seen are consumer discretionary are top of the list. Specifically, we have consumer products companies, we have media and entertainment companies, and we also have retail restaurants. That should not surprise a lot of people since clearly consumer spending drives 70% of GDP, and we have clearly seen a slowdown with consumer spending. So those companies in those sectors are showing up prominently on our monthly list.
Do you expect consumer discretionary spending to stay down?
In the near term, yes. We expect that those are going to continue to be the top 3 sectors. If you look at the ratings distribution within those sectors, if you just take media and entertainment companies alone, 87% of media and entertainment companies, and that's all of media and entertainment companies in the U.S. that we rate, 87% are speculative grade. So only a very small proportion are investment grade. So out of those speculative grade media and entertainment companies, most are single B. They're not even double B, which would be the upper tier of speculative grade.
So I know one thing that you follow closely is default outlook. What is your default outlook?
Our default outlook right now, which would be our forecast until the end of 2009, first quarter, is for a baseline of 4.7%. Now that would mean 75 companies would have to default in the U.S. Over the next 12 months. Just to give you some perspective on that number, we ended 2007 at a record low default rate, 0.97%. Since that time, we have ticked up to 1.6%. Now, in 2007, 16 companies in the U.S. defaulted. In 2006, 22 companies defaulted. So far in the U.S., which is at the beginning of it's second quarter 2008, we've had 27 companies so far that have defaulted in the U.S. Now we also have a worst case scenario and a best case scenario. Our best case scenario would give us a default rate in the next 12 months of 3.7%, and that would mean 59 companies would have to default. Now, in order to get to the worst case scenario, which is 8.5%, 136 companies would have to default in the U.S. over the next 12 months.
Thank you very much, Diane Vazza from Standard & Poor's, and thank you for watching the Deals Private Capital Symposium. I'm Mary Kathleen Flynn.